Welcome back to Making Money Matter, ladies and gentlemen. Today I've asked Brad Rogers. He's the CEO and Managing Director of Jupiter Mines.
Okay.
ASX code is JMS. G'day, Brad. Now, look,
Hey, thanks for having me.
nice to see you. I really wanted to, now, for all of you out there, Jupiter Mines, they've got a project, a mine, a working, operating mine in South Africa. I'm not going to take away all of his words, but I want you all to sit up and take some notice because it's a bit different. First of all, it's got cash in the till. Secondly, they're paying a dividend, and it certainly flew under my radar until I started doing some research. So I think it's pretty interesting. Lots of questions I want to ask Brad, but this is manganese. So I'm going to start, Brad, by first of all saying welcome to Making Money Matter. But secondly, let's talk manganese, because what is it? What's the market like? Because as investors, we're all looking at it and go, we understand gold, we understand copper. A lot of people talking about lithium and uranium, but manganese is not up there amongst it all. So can you explain to us why manganese and why now?
Thanks, Kerry, and thanks for the question. I think Australian investors think they don't understand manganese, or at least some of them. But if you understand iron ore, you probably understand manganese. Its uses are similar, its demand drivers are similar. Manganese mostly goes into the making of steel. It's the thing that makes steel hard. Without the addition of manganese, steel is actually quite brittle. And so for that reason, manganese is essential in the making of steel, and it's irreplaceable in the making of steel. And that's been a very enduring long-term driver of demand for manganese. And it's the reason why manganese has been listed as a critical metal by the US since the 1930s, because it's necessary to go into steel for war machines. So it's also a critical metal for batteries, and increasingly it will be used in lithium-ion batteries. But its main use today, 90% or even more than 90%, is steel making. And so that's why I say if you understand iron ore, for the most part, you understand manganese as well. Construction demand, any steel use goes into the demand for manganese. That is an established, mature market that's going to grow at about population level growth forever. As you can imagine, growth in population and growth in wealth requires steel. And so that drives manganese use. There are myriad other uses for manganese as well. It goes into medicines, it goes into agriculture, it goes into dry cell batteries that everyone's used forever. It goes into paint, it goes into glass, and as I said, it increasingly is going to go into lithium-ion batteries. What it does in lithium-ion batteries is brings energy density stability more cheaply than nickel and cobalt do. And so increasingly it's going to be used in the making of batteries to bring down the costs of batteries, to improve the energy stability of those batteries. And it's also widely available. So there are some concerns in particular around the sourcing of cobalt being constrained to certain countries in the world. Manganese is more widely available than that, and it's cheaper than cobalt in the lithium-ion battery. And so the outlook for manganese in particular that we're focused on is continuing to be a major supplier into steel use for manganese, and then growing a business into the lithium-ion battery market as well for manganese.
Now, some of the resource like copper's had a bit of an uptick at the moment. That supply demand, what's the price for manganese? Has it pulled back a bit, or is it getting stronger? Give us an outlook longer term for the manganese market.
Thanks, Kerry. So through the course of last calendar year, manganese prices were quite muted. And that was because demand in China was quite flat last year, and there were stocks of manganese ore at port in China. And so for that reason, prices were quite low, and also shipping rates escalated for unrelated reasons. Wars in the world, Gulf of Aden, Panama Canal, etc. All of that goes to constraining shipping supply and driving prices up. So the prices for manganese, there's two of them that we normally talk about. One's called the CIF price, and that's the core price for manganese delivered, and then the FOB price. The difference between CIF and FOB is the shipping rate. So CIF is the actual manganese price, FOB is the manganese price less the shipping rate. CIF prices for manganese were about 350 to 355, very flat through the last.
Is that per ton?
Yeah, per DMTU. per dry metric.
DMTU, what's that mean? Talk to me like a 5-year-old.
Yeah. So that is that's the measure for manganese. I agree that's a bit confusing. And what we do in our quarterly on the last page for those who like to have a look at it is convert DMTUs to metric tons. You can basically multiply it by 100 and you get to tons. For whatever reason, for conversion to manganese units contained in the ton of ore, people use DMTUs for both costs and price quoting for manganese, which can be a bit confusing, but we've got a ready reckoner in the back of our quarterlies that converts that to metric tons, and basically rough order of rule of thumb, you can multiply it by 100 and get to metric tons. So to answer your question, prices were flat. There's been supply side constraints that have been accelerating since December of last year. Firstly, because some smaller manganese miners around the world withdrew production because they weren't profitable at those sorts of prices. Tshipi was. Tshipi produces at about $2 to $2.20 per DMTU.
Now, before we get into that, I'm sorry to stop you, but people will go, Tshipi. Now, Tshipi is the mine in South Africa that Jupiter Mines have a 49.9% ownership in, and it's currently producing. And we're going to get into some detail around that in a minute, but go ahead. Sorry to interrupt.
That's right. So Tshipi's the mine. It's up and running. It's a low-cost producer. It produces around $2 to $2.20, sometimes a little bit lower than that per DMTU. FOB prices, so the real price shipping rate taken off the manganese price, got to $2.69 in November. So Tshipi was still profitable and cash generative at that sort of price level, but many other mines around the world were not. Those mines pulled back on production. That has constrained supply. Last month, in the middle of March, in addition to off the back of that supply constraint, one of the largest mines in the world was badly impacted by a cyclone. South 32 and Anglo's mine called Gemco in the Northern Territory was hit by Cyclone Megan. The mine hasn't been in operation since that cyclone hit.
Oh.
It has damaged shipping, mining infrastructure, and last week, South 32 in their own quarterly announced that they expect it will take on a preliminary basis until March next year, the March quarter next year, to return that mine to normal operation. They may try and get it into some sort of limited interim operation in the meantime, but they're targeting the March quarter of next year to restore operations. Wow. That mine is the second largest producing asset in the world and the lowest cost mine in the world. The manganese supply side is quite concentrated. The top 5 mines speak for 44% of global supply of manganese. The mine that I just mentioned, Gemco, makes up 12% and is the second largest supplying mine in the world. Our mine, Tshipi, which we mentioned a moment ago, is the 4th largest. So historically, if supply from any of those large 5 mines, Gemco being the second largest, is interrupted for a period of time, it tends to cause undersupply in manganese. And that's what's happening now, and that's driving prices up. So I mentioned before the FOB price of manganese in early December got down to $2.69. It was $3.31 at the end of March. That rose to $3.92 at the end of April. But that still, notwithstanding that 29% month-on-month increase through the course of April, still only brought FOB prices back to around 6-year average levels.
Okay.
We think the price is going to continue to run because that interruption to the supply side is so pronounced. Gemco is such a significant asset and it's going to be out for a period of months, and it hasn't operated since March. That is very likely to drive markets into undersupply. That's why prices are spiking. The high 6-year high price on an FOB basis was $6.31. Tshipi's earnings are very sensitive to manganese price movements because there's no debt at Tshipi. It's a low-cost operation. So any increases in manganese prices go straight to profit and cash flow. A $1 increase per DMTU equals about 146 million Australian dollars of incremental EBITDA. So that's why manganese right now is probably more interesting than it's been for the last 18 months or so. Prices running after being quite flat and weighed down by shipping rates, but also muted end demand. Demand is still reasonably muted, but the supply side is becoming increasingly constrained, and that's driving prices up.
Brad, I want to talk about you just for a minute
Yeah,
because you joined Jupiter Mines, I think, at the end of 2022.
I did.
Why did you join the company? What was it that attracted you? Because this is a mine in South Africa, and some people will say, "Oh, not sure about South Africa." I'm going to get into that in a minute,
Yeah, sure.
but I want to know, you're the managing director and CEO. What attracted you to this, and why did you? Because you were with BIS, which is a big logistics firm here in Australia. Why the move?
Yeah, great question. I'd been at Biz for 15 years and I'd been there for the last 7 years. As CEO, rather, for the last 7 years of my 15 years at Biz. 5, 6 years before that, I was CFO, and before that, I was in commercial and corporate development roles. Originally, when I started my career, I was a strategy consultant and then moved into corporate development at GRD after working at another smaller corporate advisory firm. So I'd spent my career, if you like, working functionally on strategy, M&A, investor relations, and then from an industrial perspective on bulk mines, both at GRD and at Biz, and then a long time focusing on bulk logistics, particularly in Australia, manganese, bauxite, coal, iron ore,
Mm.
including all of the manganese operations, Gemco, Bootu Creek, Woody, Temco, which processes manganese in Tasmania. Biz had serviced all of those during my time there. So felt I had a good familiarity with manganese. Felt in terms of the skills that I'd been working on for my career, strategy, M&A, investor relations, all of that could be brought to bear here. But Chippy, people say, and I agree, bulk mining is really bulk logistics in most cases. It's about
Mhm.
how cheaply and efficiently, improving over time, can you move a ton from the mine to the market. And that is true, I think, for most situations that I've seen. It's particularly true for Chippy and for Kalahari Manganese Field mines where Chippy is located. And that's because these mines are a long way from port, 1,000 kilometres. That would be unusual by Australian standards. And logistics methods are quite constrained and inefficient in South Africa. No one can get enough rail allocation. Chippy can't either. And so you're road hauling a lot of the volume, all
Wow.
the 1,000 kilometres, using what I think are quite inefficient methods. We and everyone else doing that. So I looked at the situation to answer your question and said, I think this is a good fit for what I've been doing. I can see some opportunities to add value. But more than that, I didn't know the situation of the mine. I, hadn't heard of it before, hadn't had a cause to come across it, and thought this is actually a really great asset, long mine life, low cost, already established and operating, well run. And so while there are opportunities to improve over 100 plus years of mine life to go, it's already running well. There's no turnaround here. There's no debt to be concerned about. And so, it was, having come across it, looked like a fantastic asset, good stakeholders, a strategy to be had there, and that's why I joined, and that's what I've been doing.
Okay, well, I said just a moment ago that South Africa potentially people turn around and go, "Oh, what's that like?" Now, I know at your time at Biz, you didn't really do very much in South Africa, I don't believe, mostly Australia. What's been your experience since joining Jupiter with South Africa as a jurisdiction? Because as investors, that's what we want to know. There are certain places where we go, not sure.
Yeah, it's an interesting one, Kerry, and I'm kind of aware of that risk aversion to South Africa, and it's something that I was anticipating coming in. In my career at Biz and elsewhere, I hadn't done work in South Africa previously. I'd been to all of the other bulk mining regions in the world and looked at the way things were done there. And in addition to Australia, Biz had a business in Indonesia focused on bulk haulage, so I had some offshore familiarity with different methods there. I think South Africa, if you look at it, the major challenges there from a business perspective, and they are real, power supply. Uh,
Mm-hmm.
Power is supplied by a state utility called Eskom. Eskom has been struggling with insufficient supply for
Yeah.
many years, and it's been getting worse. If you are a residential homeowner in South Africa, that is a very real problem for you. You are faced with a situation where you don't have supply of energy each day for 24 hours. It can be 4, 5, 6 hours or more of interruption. And as you can imagine, that is a problem in all sorts of ways. From a business perspective, and frankly, even if you're a kind of wealthy enough residential homeowner, you're off the grid now. And Tshipi was built off the grid. It has its own power station. We are also connected to the grid, and using the grid is a cheaper way of supplying the mine. But if we need to be, we are self-sufficient. The mine has been built that way. And so for Tshipi and for a lot of other businesses in South Africa, whilst power is a genuine issue, it's not a problem from a business continuity perspective. It's more a business improvement opportunity to say, how can we get better at supplying ourselves? And that's realistically how you deal with it. The major problem for bulk miners in South Africa then is not actually power, it's logistics. Logistics, rail and port are provided by another state government utility in South Africa called Transnet. They provide all of the rail. There isn't sufficient rail capacity to support manganese production in South Africa. There's about 16 million tonnes of rail capacity. Production is more than 20 million tonnes per annum and growing. And so that is why we road haul a lot of our production, and everyone does. And that's going to continue to be the case while ever there's not enough rail capacity. The ports are also constrained. So you have this situation where everyone, including us, would love to be rail hauling more material, but we're not. We're inefficiently road hauling material. But for all of that efficiency, which is true and is a frustration, we still make very good money. We're
That
still
was going to be my question.
so again, as I said a moment ago, whilst there are opportunities to improve, and that is part of our strategy in this area, you're starting from a base where you're still making good money, and there's upside opportunity there to do better by moving some of those, in my view, road haulage standards to a better place. Rail is something we can't fix on our own, but it's a battery limit for everyone in South Africa, and manganese. South Africa is the world leader. So South Africa supplies 36% of the world's manganese ore. So you've got 36% of the supply side all constrained by the same factor. And so from my perspective, we look at rail as frustrating. We'd love to see it improve, and we'll be in that conversation, but we're constrained, so is everyone else. What can we improve ourselves? And that's more in the road haulage side of things. So South Africa is actually, I've gotten off track here, Kerry. Sorry about that. From
No,
your,
that's okay, because we're running out of time, and I want to dig in if I could.
yeah, please.
Brad, you own 49.9% of the Tshipi mine.
Yep.
It's operating, it's profitable. I'm looking at it from a shareholder standpoint. And by the way, ladies, not financial advice. Do your own research, or call Brad after this interview. But and I noticed that your share price has had a bloody decent run. That's technical term, ladies and gentlemen. Since in just the last couple of months, it's up about 50%. So what I'm looking for is, where's the shareholder value, the shareholder growth going to come as we head down into the second half of 24?
Yeah, so couple of things are going to drive shareholder growth. As I said, the manganese price has run already, and that's a big reason why our share price has responded quite materially in the last month and a half since that incident at GEMCO that I mentioned.
Mm-hmm.
That has done two things. It's brought attention back to manganese in general, and Jupiter is the largest listed manganese pure play miner in the world. And so that manganese thematic has been drawn somewhat to Jupiter in terms of a point to invest in and benefit from re-rating manganese prices.
Hold on 1 second. You said it's the largest manganese miner in the world, but it's before you said it was the fourth largest.
So yeah, good point. Tshipi is the fourth largest mine. Those larger mines are owned by companies that do other things. And so if you want to invest purely in manganese in order to get exposure to prices, for example, then Jupiter is the way to do that. We're the largest in the world. There are R32, Anglo, other companies that own some of those larger mines, but that's only a small part of their business. And so you're not getting pure exposure. Okay. So yeah, I think the reason to pay attention to where's the shareholder value, as I mentioned, notwithstanding manganese prices have increased 29% just in the last month, that only now brings it back to average 6-year levels. They had been much lower than that. Given the supply tightness enduring, everyone expects, we do too, that manganese prices should continue to run over the forward period. And Jupiter benefits from that. That improves revenue earnings in the way that I mentioned before, and that flows through to Jupiter as the major investor in that mine. We have a growth strategy. It's detailed on our website, which will take us through a 5-year period from March last year when we announced it until 2028. That strategy is to say everyone likes dividends from Jupiter. We have the ability to keep paying those, and we will. But we also have more than 100 years of mine life remaining and a really good opportunity set in front of us in South Africa that we think we're well positioned for. And so, in addition to paying good dividends, in addition to being exposed to the manganese price cycle, which was low and is increasing and will drive benefit to Tshipi and Jupiter, we have a strategy to grow our business to continue to build around this really good starting place.
I mentioned before that the ownership that Jupiter have of the Tshipi mine is 49.9%. Can you explain, because that's not a majority ownership, are there any, why 49.9%? Would you ever go and take 100% ownership of it? Is there some sort of black empowerment issues around the mine? I think these are two quite important questions.
Yeah, they are important questions. So why 49.9%? Jupiter was listed in 2018 based on a company called Pallinghurst that helped fund the construction of Tshipi, and they own 49.9%. Pallinghurst backed their interest in Tshipi into the listing of Jupiter in 2018. So why 49.9%? Because that was the ownership of the mine when it was constructed, and Jupiter picked up Pallinghurst's interest in that mine. You're right, that means we don't operate. And so I'm on the board of the mine. The mine is well run by a dedicated team at site. There are two other investors at Tshipi. One is called Ntle Holdings. The other is OM Holdings. OM is also an ASX listed company. They own that other 50.1% together through a vehicle called Ntle Mining. So there are two other investors there effectively on a look-through basis in addition to Jupiter, and we're all very interested investors in this great mine. We're all sitting on the board. Jupiter has a strategy to grow its exposure to manganese ore production in the Kalahari manganese field. The Kalahari manganese field is where Tshipi is located. It's the best manganese field in the world by a long stretch. It makes up 36% of the world's production of manganese right now, but it's got 73% of the world's reserves of manganese in an area of land that's 32 kilometres north to south. So South Africa is already leading and prominent in the world of manganese production. It's going to become more so because some other significant mines around the world will be coming to end of mine life in the next 5 to 10 to 15 years. Whereas you have Tshipi and some other mines in the Kalahari manganese field that have in excess of 100 years of mine life remaining. Tshipi is open cast, very long life. It can expand its production if there's an opportunity to do that and grow its share of the manganese supply pie. So that is part of our strategy. But to your point, Jupiter, in addition to retaining our interest and enjoying continuing dividends, has a strategy to grow through acquisition in the Kalahari manganese field.
Right.
Logical point to start there would be acquiring more of the mine that we're in. There are some other good mines in and around us that are actually really proximate to Tshipi, a number of 1, 2, 4, 5 kilometres away. And so the synergies between mines that are already globally significant in terms of their production, putting those together and taking geological management and also logistics synergies away is the backbone of that growth opportunity.
Right. So just to make it clear from, again, just getting my head around it, Jupiter Mines owns 49.9% of the Tshipi mine in South Africa, pays dividends.
Yep.
But Jupiter could go out and do a little bit of M&A activity in one of the largest manganese fields in the world, which will give added growth to the Jupiter mine portfolio.
Yeah, that's right, Kerry. And you asked about black empowerment a moment ago.
Yes, I did.
Answer your question on that, and thanks for asking it. I think it's something that offshore investors don't understand that well. It's something I didn't understand that well before I got into this situation. I had been in businesses before that had looked at going into South Africa and hadn't done that because black empowerment seemed like a hassle relative to opportunities around the world. So I think that's a realistic factor. The reality is we're already in there. We are already empowered. Jupiter's largest shareholder is in Ntle Holdings. I mentioned before they're also our largest co-investor at the mine. By virtue of their investment at the mine, as an empowered company, Tshipi is empowered. And so what that means under South African law is that they can sell their shares to whoever they like. They're not constrained to only sell to other black investors. There's a well-established principle of law in South Africa called once empowered, always empowered, which makes sense. Just means that if you are a black investor in a mine like Tshipi or in any business at all, you can sell to whoever you want to, because if you were constrained from doing that, then you wouldn't be able to maximize your investment value like any other investor could. And so while it is a unique factor for investing in South Africa, it's something that's as simple as that. Operating businesses like Tshipi are empowered already, and once they're empowered, it's not a constraint for those investors selling out.
Well, it's been interesting, and your current dividend, I think, is about 5%. Is that right?
Yeah, so we've paid 20 cents total in dividends in the last 5.5 years. Our share price today is a little under 30 cents, but considering the mine that has paid those dividends has another 120 years to go, that's another way of looking at it. So obviously the yield will move around based on what our share price is, but 20 cents in 5.5 years, including the most recent interim dividend. We just paid a 1 cent interim dividend off the back of a quite poor manganese price environment in 6 months. And so we think that demonstrates the robust capability of this mine to trade through any price environment and continue to perform well.
We've run out of time, I'm afraid, Brad. I'll have to get you back on because it's a fascinating story. And I think under good guidance, especially yourself, this is a bulk logistics play. You have to understand logistics to be able to get, I guess, the most out of this and the most efficient way of doing it. And as you said, it's a long way from the mine to the port. That's where efficiencies can be gained. Let's wrap it all up and give me 3 reasons. Give our community 3 reasons why you think they should sit up and take notice right now.
Thanks, Kerry. So I was prepared for your 3 questions.
He must have seen one of my other interviews.
Pays the research. So I think we probably touched the points, but in summary, Jupiter and Tshipi have established themselves as really strong dividend payers, and the strategy is to continue to do that, and there's no reason why we can't. So there's a really nice backstop there around a mine that has a long way to go, has no debt, has low costs. Jupiter has no debt either, and that's why we've paid out good dividends, and that's part of the strategy. We're at a point in the manganese price cycle that is re-rating after being quite low for the last 12 months or so. Notwithstanding, it's already re-rated 29% just in the last month. That only just gets us back to 6-year average levels. And the drivers that have been driving that price increase, supply side constraints, are still there for the next period of time. So we think that price continues to increase. The leading indicators out of China support that view. We have pure exposure to that manganese price because manganese is all we do, and there's no debt at either the mine or at Jupiter. And so that goes directly to the share price of Jupiter as well, which is what we've seen in the last month. The share price of Jupiter has increased from 17, 18 cents in early March to just under 30 cents today. The third one is the growth strategy, and we've touched on that in our conversation. And if anyone's interested, they can see that broader growth strategy on our website. That is in addition to continuing to pay dividends, growing our business in 4 different ways. One is improving operating margins, particularly around logistics. The second is increasing production at Tshipi and growing through M&A in the Kalahari. We've just launched a sustainability report, and the key focus of that is putting solar in at Tshipi, which helps from a financial and an ESG perspective, and then taking byproduct ore to make battery-grade manganese and grow a new business for Jupiter. That's all in the next 5 years strategy. We're 1 year into that, and we're embarked on all of those elements and providing updates to the market as we go. So those are the 3 reasons I think people should pay attention. It's a great mine and a great business in a really good time for manganese.
Under good leadership. You can find more at jupitermines.com. And please, thank you very much, Brad. It's been great to see you. Come back on soon. Let us know the latest updates when they come. But for now, thanks so much for joining me on Making Money Matter.
Perfect. Thank you, Kerry.